Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, July 22nd, 2009. Well, we're seeing a mixed bag on Wall Street today, folks. Kind of a day where you're seeing the markets up and down. The S&P's up 1.5 points, the Dow is down about 6 points, and the Nasdaq is having a strong day on the back of solid Apple earnings from last night, up about 11 points on the day. So that's where we're sitting right now. You can see the market's been up and down and all around today. Really, we kind of gapped lower on the Morgan Stanley and Wells Fargo earnings today, and I don't know if you caught those, but just to recap, their earnings were not very pretty, although in all fairness, the stocks have recovered very nicely off their lows. I'll show you those charts in a minute. Right now, what you're seeing is the market has gone pretty much choppy all day long. You just traded up in the positive territory across the board, as you can see up here on the markets, and then just had a nice little sell-off here in the markets to the down to the 20 moving average. Now, you've got to follow your trend lines, folks. Key trend line supports, as you can see on my charts, you had a triple top right here from yesterday's high gap up to today's high. That was a beautiful shorting opportunity. We nailed that on the blog as well as in the chat room to our premium subscribers. Then later in the day, you came up, touched it, and broke out. Remember, the first hit of a trend line is always the best, whether it's a moving average or a trend line using trend technical analysis. Now, bottom line is this, folks. What you saw here, you saw a little bit of a breakup right above the even number 96, and then the market fade right back below. So you can see the market still very, very choppy in this range. We're now hovering right on top of the 20. Notice the 20 moving average, folks. Ever since this morning, you gapped down here in the candle to the 20 moving average, and then you just started to rally. And you had a monstrous rally to a perfect double top. Again, note the double top right here, going back to yesterday. That was a great shorting opportunity in the intraday session. By the way, everything I talk about here, it's shorting, double tops, double bottoms, MA patterns, WV patterns, whatever it may be, that's always, it can be translated to the daily chart, the weekly chart, the monthly chart for those of you that are more swing traders or long-term investors. You have to utilize that same thing, okay, guys? So please remember that. Now you can see the double top worked perfectly. The market sold off here. Where did we go to? The 20 moving average. Then we bounced off the 20, came down again, hit the 20, closed below the 20, but there was no confirmation of the breakdown. So you did not have an official breakdown. And I want to repeat that. You need to see confirmation on a break up or a break down above a key moving average. And a key confirmation is when you have a secondary close below the previous low of the candle. So we would have needed a close on this green candle, but it would have had to have been red below this low right here. That would have told us there was a breakdown, and you would have gone right to the 50 moving average down here. Instead, you reversed, never confirmed it. That means you recaptured this. That tells you there's upside coming. Sure enough, the market moves up right here, all the way to that double top, triple top now, right here, at which point you break up, and then you close back on the line. The next candle closes above. So the next candle, once you close above a key trend line, you look for confirmation again, right? So again, we closed above this trend line, which was the double top, triple top, on this green candle. Then the next candle has to close above that, the high of this candle, which would have been this green dotted line. Unfortunately, you did not see the confirmation there. In fact, pulling all the way back, closing back here. So you did not get confirmation again. These two candles are inside bars, inside the red one. That's bearish. You have to be able to read these charts, guys. We teach you this in the Research Center, so you probably should subscribe to really get a full grasp on this. But inside bars, inside this red is a bearish pattern. What happens? Market falls. So the candle right here, 1, 2 green candles actually predicted this fall right down to the 20. Now you're actually consolidating right on top of the 20 moving average here with the markets generally mixed on the day. Again, the Dow is lower, S&P is pretty much neutral, and the Nasdaq is slightly positive, up about 9 points right now. So that's where we stand right now. If you want to know your key levels, you have to still watch this level right here at around 95, 90 to 96. We want to see if we can take out the highs of the day and actually confirm this breakout up here eventually later today. So far, it doesn't look so good, but with light volume in the markets right now, you never know. We could always do it. Again, the S&P's up 1 point, Nasdaq up about 9 points, Dow is down about 9 points, and you can see the 20 moving average right here definitely holding well right now, and it was holding well here and here. So all day long, this 20 moving average has been very, very sturdy. Oil is down about 40 cents on the day, just a minor move down today on the USO, nothing crazy. It was down much more at the open. I'll show you that chart on the USO. Alright, let's take a look at that USO chart. Let me punch it in here, and we'll give a quick little look at that. Here's the USO, folks. What you can see is ultimately we gapped down right to the 200 moving average. I called this out to the chat room and also posted it on the blog, and sure enough, look at the move off of that. We called it as a long here with an upside bias. Look at the move, beautiful move right up into this low right here. We called it as a bearish play. Notice how it hit the lows from yesterday. Sure enough, it fell right down. All right, so that's two good calls right there on the USO. You pulled back, then you started to rip higher. This is as the dollar started to get weaker. Now the dollar was the reason why, guys, and I want to say this again. The reason this market is flat to slightly positive today is precisely because of the dollar. Why? Because when the dollar drops, and let me show you the UUP chart, which is the dollar index, look at this drop. When the dollar drops, it gives oil a kickstart. Oil will rally, or oil has to go up and appreciate in value because the dollar's dropping. They're inverse to each other. They're tied amazingly close together. So when that happens, you're going to see oil go up. ExxonMobil will rally, and let's put up Exxon's chart here. Look at Exxon, which gapped down, and look at the move on Exxon when oil started to rally up, and now Exxon's kind of going sideways, getting a little bounce off the 50, but long story short, you're going to get a bid on Exxon, you're going to get a bid on the rest of the market because so much of the S&P is due to commodity stocks. So long story short, Goldman Sachs, very strong today, was gapped down over $2 today. Now it's actually positive slightly on the day. So you can see there's a lot of these key major stocks out there that are now slightly flat to positive on the day, and that's due mostly to the dollar. Dollar's weakness is the market's gain. Think about it like that. If you hear that the dollar got weaker, at least in this time frame that we're in right now over the last month or two, that the markets will most likely be higher, and that's why the markets have done so well over the past few weeks, which is again due to the weaker dollar, which is causing a commodity or reinflation rally. Now, we talked about Wells Fargo's earnings, folks. Look at this gap down on Wells Fargo. It went sideways, beautiful sideways pattern, and then broke up hard. It is pulling back a little now, but it's just down 67 cents. This was down over $1.50 on the day, so a beautiful move back up on Wells Fargo. Morgan Stanley, look at this. A gap down on Morgan Stanley, and look at the move higher, and then choppiness, choppy right in here. You have some resistance right up here, as you can see. The high levels, all this from going back from this pivot right here. So you do have choppy, but Morgan is positive on the day. This was down over $1 on the day as well. Actually, $1.50 down earlier in the day. So it's really been an amazing reversal on Morgan Stanley. Some of these stocks continue to have underlying bids, folks. Gold is trading up on the weakness in the dollar as well. And, wow, nice little dip there, but a little fake print on the Wells Fargo. That was just a fake print. Nothing to do there. But long story short, let's go back to the spiders, folks. We're still hovering right above this 20 moving average. This 20 moving average is support on the intraday spiders. If you move lower, you're going to hit support at 95.50. Below that, the 50 moving average at 95.25. Below that, this pivot low, gap low from the today, the low point of the day at 94.90. And then after that, yesterday's low of the day at 94.40 to 94.50. Those are your levels. On the upside, you're going to watch resistance at 95.90, and then ultimately at the highs of the day at 96.11. That will be good resistance as well. Right now, generally in the afternoons, we've been seeing the market float higher. Can today be a change in character? Keep an eye on that. We're really looking for a change in character in this market to see if anything happens. All right? Now, definitely come join the Research Center, the Pro Trader Watch List, the Hidden Gems, the Hot Charts and Alerts. So hot, folks, right now. Just tons of good information, good guidance, good picks and everything in there. We do encourage you to come join up. We hope to see you involved there. Also, the chat room is always great if you have some intraday time during the day when you're at work, when you're at home, whatever it may be. Always great. All right, folks, have a wonderful day. We'll talk to you soon. Take care.